Welcome to the Business Growth Spotlight, where we talk with business leaders from all over the world who share their expertise and wisdom so we can all grow together. I'm your host, Heidi Schalk, co-founder of HLH Growth Solutions, where we help businesses scale revenue through outside-the-box visibility strategies. I'm excited to dive into with my conversation with my guest today. We've already had it's awesome behind the scenes, which you guys can see that because sometimes we have a lot of fun behind the scenes, and today was one of those days. But without further ado, I want to introduce my guest, Max Wolff with Systematic. So welcome, Max, to the show.
Thank you so much for having me. I'm excited to be here and meet some of you out there, and thank you for your time too.
Thank you. So Max, can you kick us off by telling us a little bit about yourself, Systematic, and your role within it?
Sure. So hopefully this is the least exciting part, me. So my background is as an economist, a group that not everyone sort of associates with electrifying speech. I taught at university, even worse, where I taught graduate quantitative methods and macroeconomics. Do like the space, got my start in the business side, teaching, but also working in the hedge fund space, doing a whole bunch of stuff, particularly on the short side, which is an interesting way to learn to not listen to everything going on around you, but pay attention to it. And I think that's important in venture too. So maybe a decent life skill there. I got kind of into tech in about 2010. So I've been in this business for only about 15 years, but it probably makes me like an old gray beard in this business because it tends to be a little bit of a younger woman, younger man's game. And I started being the first coverage or one of the first analysts around some big names and worked on some IPOs. And that would be like LinkedIn, Facebook, Twitter, Zynga, Square, Foursquare, Groupon, Living Social, Alibaba, Ant Financial, Splunk, Jive, and Palantir. So I did a bunch of names, got to know the space. Slowly you figure out that the most exciting things are happening early on in the sort of wild west of the business, where young women and young men are going to try and change the world by taking enormous risk and working enormously hard for an enormously small pay package. And so the sort of lore of the Valley says, did that for a bunch of years, was on the investor side mostly, advising investors, talking about valuations, managed to do a couple hundred or more media appearances on that side, got interested in talking to people and stuck with the venture stuff. So that's the sort of Max story. My most recent job before this one was I was employee 3, I think, in fintech called 55, where I met my co-founder, a guy named Magnus Sigurdsson, Icelandic data scientist, and we built global macro hedge funds using only ETFs for a guy named Lee Cranefus, who invented the ETF business. He had a previous startup called iShares, which probably everyone's heard of, or most folks have, did well. And he wanted to take that and say, okay, how do we do the recipes, not just the groceries, and teach people how to put these ETFs together? We did that for about a year and a half, and we were bought by JP Morgan Asset Management. And so we said, hey, let's do this again, but let's do it for the craziest corner of the world where nobody does any quantitative research of any kind. And that's basically venture. And venture is the shoeless cobbler of investing. So everybody has to be transparent or they won't invest. Everybody has to be growth oriented or they won't invest. Everybody has to be data driven and efficient, except for in venture land, people are not data efficient. They're not open. They're not at all transparent. So it's a lot of opacity. It's a lot of mostly guys thinking they know the future by looking into the souls of people. Mm-hmm. And then if you do a little bit of interrogation, they mostly invest in people that are as similar to them as possible. And why? And then I'll give you the name for our company, Systematic, because if there is no systematic risk and return calculation, people end up seeing difference as scary and similarity as comforting. And so they invest in similar ideas at similar times and people who look similar to them, whether they've met before. Makes sense. That's a social network. We're trying to help lead a data-driven transformation of that into an investable sector. That's why we're so drawn to you too, and Heidi, what you're doing, because you're trying to say, get out there, tell people what you offer, and let them make a decision. We are too. We just express ourselves with data scientists, as data scientists a little bit differently, trying to say, hey, what if it's more about what you're building than who you know and who you are? And we're still not all the way there, although getting there as venture, we're just happy to be part of an assistance to that sort of tradition and maybe that transformation. And we do that by building huge data sets and letting people build a profile, say who they are, reach the world. And then we score everybody. So we score about 300,000 private companies, about 200,000 investors. So folks can find each other based on what they're trying to build, based on vision, based on compatibility, not just if they all played squash together.
So you're creating partnerships, relationships.
Yes.
Yeah.
and creating some sort of big sense where you can be systematic. You can say, I want to meet every B round company that's got a more than 80% chance of exiting that raised more than $5 million. My system can then surface them all, sketch them out, and give you a way to press a button and find them.
Wow. So let's talk about that. That sounds very efficient. So how are you saving companies time, and I'm guessing money too?
Yeah. So if you're on the startup founder type, mostly you spend a lot of your time randomly talking to people who are famous and asking them for money. And
Mm.
they mostly don't get back to you or they say no. Or if it were really venture-y and you have a hot name, you talk to somebody, they'll tell you you're the greatest person they've ever met before and then ghost you. Right. So this is the sort of most attractive single at the bar coming up, talking to you for a long time, saying they're going to go to the bathroom and never coming back.
It
So
sounds like
usually,
dating. No, just kidding.
yeah, probably not the highlights. All right. This isn't Sports Center highlight reel.
Yeah.
So this is kind of like the greatest heartbreak moments, right? Which people don't tend to love. And so unless you know a lot of people already, in which case that's good, unless you've had a success before, that's very helpful. It's really hard. And so our idea is do a universal application. So when you apply to graduate school or college, you can now do a universal application and then specialize it for a few schools. We've done that for every startup. Come build a profile. We'll suggest good matches for you, people who do well investing in companies like you by geography, by age, by number of founders, by sector, things like that. And so you can go out to them, or you're discoverable by the broad world. And the idea is we will help you at almost very little effort, always be ready to raise funds or raise by borrowing money. And so you won't spend a lot of time with an unpaid part-time job for the whole life of your startup that usually makes you feel bad about yourself,
Mm.
right? And that's
Yeah.
what we do for founders. What we do for investors is say, look at the whole space, consider things you wouldn't have considered, places you wouldn't have considered, teams you wouldn't have considered, and do it faster, cheaper, and easier using data science. We're kind of, in a weird way, putting shoes on the shoeless cobbler, a venture, which tends to be run on a social network. And the good news is we've outgrown the social network. Bad news, we still use a social network.
Yeah. So what is the vision that you're building towards?
Yeah, so in our vision, you'll get funded based on the quality of what you're building,
Mhm.
not who you know. Because right now, there's really no discovery. There's no way for investors to discover founders very much. There's competitions and there's incubators and accelerators, and they're fantastic, but they serve a pretty small sliver of the market. And for investors too, they want to see more. But here's the problem. Mostly investors work like this. They reach out to 10 or 20 companies, many of which are through relationships. So 20 companies, let's say 10 to 15 through relationships. They dig deep into 10 because the economics don't permit them to dig deeper into more. And then they pick the three of those 10 or 15 that look least worst. And they spend a bunch of time getting to know them better, after which they've spent so much time and so much money that they pick the best of those. And so it becomes an insider game. And while they talked to 15, kinda, and three at depth, there are 60,000 companies trying to build a solution to what they're looking for.
Mm.
Right. And so there's that. And then everybody copies whatever everyone else is doing that looks successful. Right. So my joke, which made me quite unpopular sometimes, is that as a general rule, venture investors are about as trend dependent as teenage girls picking outfits. They're about that creative. And, not to ding teenage girls who probably are more creative these days about outfits, but the point is venture builds the future. And my thought is if you have an inclusive and responsive future, you can only get to that point by following the wisdom of the crowd. And that is, and I'll give you an example. We started this company, having just exited the last one, unfortunately for us, in the throes of early COVID. So, like, really February of 2020. And I was getting all these pitches, because I still looked at deals for a bunch of VCs and banks for dog walking services, a la WAG. Not to beat up on WAG, but I thought to myself, this is the most tone deaf pitch possible now, right? Everyone's at home. You can't go to work. Spending time with your dog is probably the only thing keeping you from going nuts.
Yeah.
And inviting someone new into your house who might kill you so that they can palm your dog crap seems like a mediocre idea, right? So
Yeah.
I started asking people what they're doing. I got nothing for PE. I got nothing for support groups. I got nothing for vaccinations and debates about vaccines. But I got a lot of people who wanted to possibly kill my family to walk the dog, right? And again, not their fault. I don't think it'd be murder, but the point just being that strikes me as a little bit tone deaf, right? Last thing I'll tell you, we were excited to work with some female entrepreneurs who have this crazy idea that venture hadn't thought about at all, which is what about direct to women healthcare? How did VC forget 51% of the population? Probably because they give less than 2% of funding to women.
Right.
Okay, that's a pretty big miss,
Yeah.
right? So it just strikes me as a pretty big miss, right? And then you sort of have five, six, seven, eight, nine things like that going on. And you think like, okay, when you're a guy pitching a company, no one accidentally hits on you too. And so how do you fix that? Right? How do you allow more voices to be heard? Because that's how the best solutions to the biggest problems get found.
Yeah. Um, I love all your analogies. You make me laugh because I have a teenage daughter and I had
Okay.
dogs and I'm dogless now. And I do see how dogs probably did get us a lot of people through COVID because you're home alone. And now I'm home alone and I'm like, I miss my dogs. So yeah,
Yeah.
it's
I
like,
never had a dog, but
you
I do have an
know,
8-year-old who thinks she's a teenager. So I go through this all the time with her. Yeah.
how old is she?
Eight.
8.
Eight.
Oh yeah. Oh
Yeah.
yeah. Wait till she's 12.
Deeply opinionated about her clothing and like just because it's 45 degrees when I suggest not wearing shorts, it's just proof positive that I'm an
You know,
imbecile.
you know nothing,
Yeah.
Dad. You know nothing.
Yeah.
Yeah.
Absolutely.
My daughter's 16. She's getting her license
That's
tomorrow.
probably harder.
So wait,
Yeah.
wait, wait, wait a few more years. Wait till she's 12. Oh boy.
My
Um,
old joke was I wanted to invest in self-driving cars so that I never have to worry what my kid's doing driving around or being
exactly.
driven around by one of her teenage pals.
Yeah. Well, we had rules. No driving with other teenagers. That was a rule for a while. I had to know they were driving for a while. So you'll
Right.
figure out your rules as you go. So tomorrow she's got rules. She thinks she's like, I can drive anywhere. I'm like, no, you can't drive anywhere. It's not free to just come
Right.
and go. We're gonna work on
Right.
that. But yeah, wait till it's coming. And girls, whoo, they're opinionated.
Right.
So I wish you luck. So,
Uh-oh.
Max, so how have global factors like remote work, macroeconomics, or regulatory shifts reshaped your investment thesis in recent years?
Yeah, so there's been a lot of shift for a bunch of reasons. One is that employees have been distributed around. Now, sometimes in venture you need that because there's centers of innovation in Austin, Texas, and Boston, Massachusetts, and San Francisco, and New York, and far beyond. Most of the venture has unfortunately kind of ignored the startups that are outside the kind of most usual spots, but we've seen that change a bit. So now we give you that global view that you otherwise don't have because you're not going to have a scout in 73 cities, but I do because I can upload, right? We also geofence all the opportunities so you can see where the founders are. And we've done a bunch of analytics on how successful founders are from different areas because success rates vary. So that's given us something to offer people this sort of presence in a lot of places, which is hard. And also, a lot of people have work from home teams. And so work from home teams have trouble hosting and they have to move around. And so we're useful there. The other big thing is that starting your own venture firm was very, very popular until 5 years ago, 4 years ago, and it's become incredibly hard.
Mhm.
De novo and emerging venture fund managers have really had to work much, much harder to raise less. Part of what's happened is the excitement and the money flowing into venture has really changed. The venture world is in a big shift. We hope to sort of make something good of it, but it's a big shift. So the traditional big VCs are gotten much bigger. Everybody else is at a hard time raising money. And vast, vast hundreds of billions of dollars has moved into venture investing from banks and also from strategics. Think about Nvidia or Google or some of these big players. And they've bought a lot of what's going on. They buy a lot of companies now. And
Mhm.
so getting seen by teams outside of the traditional Valley teams is actually more important, especially in the emerging hot zones, because there's always emerging hot zones. Like so right now, dual use, civilian and military, is very hot. Okay. Obviously, chips, physical hardware is hot again for the first time in quite some time. Med device, computational biology, there's some crazy stuff going on. But what you're seeing is tens or hundreds of billions of dollars going to a handful of dominant companies. And so everything else is out there languishing. So being seen is really hard.
Yeah.
Okay. And understanding where to go to be seen is even harder. And that's probably why you're so popular too, right? It's just get out to a bigger audience. That's why I'm here, right? Obviously, the interpersonal charm is important too, but like, you want to sort of get seen and we help you. We basically say, here's where you sit in the stack of companies. Here's what's going on in the business. And here's who you might want to talk to. And here's how you reach out to them. And everybody's already got a built-in data room from us and a built-in profile. We take you through a bunch of questions. It's 20 minutes and we'll help prod you to update it. And then you're investable. And that's hard because building a data room, doing all that work is another uncompensated part-time job. And generally, an uncompensated part-time job that costs a bunch of money where you get rejected constantly is only so exciting to most people, reasonably, right? Unless you just love being rejected or something, it's going to be a tough business. And probably if you love being rejected, it comes with a bunch of other issues that you have to sort through. So I'll give you the time to do that. And then the truth is, if we're going to be a little bit pessimistic but honest here, getting funded is more a test of how good you are at asking people for money than how good your startup is.
Mm,
That's the other problem. So if I'm an investor, I'm going to meet a disproportionate of people who believe in themselves, and that is fantastic. But not everyone who thinks they're great is, right?
right.
Not to fall back on the dating analogy, but a lot of people who think that you should be excited to meet them are wrong because they don't know you that well, right? Or because it's really a measure of how comfortable they are blaming someone else when the interaction goes wrong. But that's a weird selection metric. And so what we're trying to build is a way for people to approach who's a more likely yes for them, right? No guarantees, but who might want it, right? And what I can let you see is the history of all the investments an investor made, where they did well. Where do they invest by geography? What kind of teams do they like? And then we arm the investors with the history data. So we have 1 million rounds of venture history in a database, and
Wow.
we've really worked through it to find statistical patterns, right? Like, I'll give you some good examples here. Most people kind of believe the Silicon Valley myth that the
Mm,
Lone Ranger, the sole founder, is great. They're not. They fail much more likely than two co-founders or three co-founders or even four co-founders. So everyone thinks that they're wrong. Okay. A lot of people also think the best companies are founded in good years where there's lots of money in venture. That's also wrong. So the best companies tend to be founded in really hard years where there aren't so many competitors, which kind of makes sense too, right?
right.
So just a lot of things people believe. For instance, women entrepreneurs, people think, hey, let's not invest in women. They don't do as well. It's not really true. So women tend to be less aggressive in their valuations, right?
Mm,
So they don't ask for as much money and they have a harder time raising money than men. That's some portion of which is probably discrimination, right? But
right.
they also fail a lot less. So they seem to be able to get a little further for the dollar, and they're less likely to spend their money on, a homebrew delivery system for their office than their male counterparts, and they're more likely to spend it on marketing and stuff like that, which is useful, or engineers. Yeah, so there's a bunch of things we tend to think in the business that we only think because we've never tested what we think against statistical rigor.
Wow. That's so interesting. Yeah, that was, I don't even know what to say. I'm like, things that you shared just now, like about women, especially female entrepreneurs, because I know the stats are so low when it comes to female entrepreneurs gaining money, and just how you laid it out about why is so beneficial. And then what people think and what's reality is really intriguing. So we're going to be asking you how to people can find you because listeners, you
Sure.
need to, because even what he just shared with us now, I'm like blown away by some of that information because I didn't know it before you came on here. So what you mentioned hot zones, Max. Which industries or technologies are you most excited about right now? And where do you see system level opportunities for high growth companies?
Sure. So we're focused in a few areas and we always engage in the areas we're focused in. So to me, I think there's a real revolution going on right now in dual use, right? So bad news, but macro news is the world is a less cooperative and more dangerous place than it was 3 days ago, 3 months ago, or 3 years ago.
Mm,
Okay. One. Two, the way wars are fought and countries are defended is radically altering, right? So if you look at the Israel's sort of Hamas, you see different use cases of different technologies there, much more so Ukraine, Russia, right? And so you see that the European Union is going to rearm itself as nations of the European Union because of the new threat assessments. And that's a multi-trillion-dollar opportunity. You also see the US is going to realign its sort of hardware system and training. And that's a big focus. So you have trillions and trillions of dollars pouring into a new way to defend your border, a new way to defend your country, and a new way to project power. What does that mean? You have a guaranteed, not cyclical, government assisted 2, 3, 4 trillion dollar spend. I mean, over the next 10 years. And not surprisingly, there's already lots of people migrating to the area. There'll be more. I think it's a big one coming. The way chips and AI chips are designed turns out to be a pretty big deal. The way that chips are designed and distributed around the world is under some threat too, for a host of reasons. Taiwan just being the sort of linchpin of global microchips in a way that might be trickier to sustain going forward. So I think there's a big story there. I think computational biology is huge. I think a lot of basic diagnosis and medical care will be rendered by artificial intelligence using database. And already a bunch is. So I think that's a huge shift in the world. I also sort of suspect we're seeing the beginnings, maybe a bit more than the beginnings, of a sort of wellness and self-care app ecosystem that grew as a luxury indulgence and is going to come back as an alternative healthcare delivery platform. So I think that's pretty big. Last thing is I think the direct to consumer internet has woken up to women and older people,
Mm.
which together make the largest group of spending power undersold too. So it makes sense. And I think that's a really big deal. The last piece I like is new platform based fintechs like us, but many others, because I think the next gen inheritance movement is happening.
Mm.
So there's a funny thing happening, right? We're being told that younger people and women aren't good at making decisions, but younger people and women in the United States are about to inherit $50 trillion in global wealth, and they're going to make those decisions. The good news is there's never been any evidence that they're not good at making the decisions. That's mostly bias. But the change news is when different people make decisions about how to allocate money, in my experience, it often leads to slightly different allocations, right? The analogy I always use because I have a kid is if I ask her what we should have for dinner, I have a predictable pattern of answers, and they're not the same as if you ask an adult, right? So adults probably aren't going to eat, frozen yogurt as their main dinner, right? Or whatever. I hope not in any case. So in any case, you get different answers. So what I think is that there's a part of a model in venture that's stale, pale, and male. And I think having a stale, pale, male decision maker in a brave new world of opportunity might have a higher efficiency cost. And that's why we think that bringing the new technologies, alternative ways of seeing things with AI and large databases and interactive reporting
Mm.
might be well suited to the pivot we see in our industry, which again, we think has done a great job in many ways and continues to sort of amaze the world with its produce, but maybe has been late to the transparency and automation that we're trying to bring. So we are again trying to fit a new efficient pair of shoes to a shoeless cobbler in terms of opportunity breadth and depth of view using AI. We're doing it in venture and excited to help startups and investors in startups who are a part of your listening audience and
Mm.
look to you for that kind of guidance.
So you talk about being seen and the importance of it. So how are you being seen? How are you getting in front of the investors and the companies, and what's worked for you as far as how you're putting yourself out there? I know that you do a lot. And then also, have you done things that just haven't been as effective in the results that you wanted to get?
Fantastic question. Sadly, the question's better than my answer is going to be. So we made a classic startup mistake that I've told other people not to do, but I stepped right in it. So I'm going to tell you my cautionary tale because it might be more useful than a happy bromide here, which is we over kind of engineered the product and we were slow to come out on the market, even though I have a lot of media experience and such. And I think we did one thing right, which is we've had thousand plus conversations with users, potential users, and we gave it out to a lot of people. And what we found is a lot of people weren't really ready for what we were doing. So we re-engineered the product several times, and we've been slower to come to the market. What do I mean? Well, I kind of built you this 21st century dashboard, but then when we went to the sort of leading VCs, this was a little bit like gluing an iPad onto the dashboard of a buggy, right? So they said, this is cool, but this is not how we do business. I don't know how to use this. So we actually had to go back and build an automation tool so that it sort of makes sense, right? You had to build the car, not the horse and buggy to go with that. So that was a bit of a wild experience. We're now starting to come out to the market. And I think what we're doing now is going to sort of select interesting startups and inviting them to come on board. And I'm happy to invite them to come on board with a coupon I can work out with you from your show. Because right now, I just want to onboard a lot of startups, show them we could help them. And we already do have a whole bunch of investors. And so, strangely for us in an upside down world, maybe because I've come from the investor side, and so is my co founder,
Mm.
we've gotten a lot more signups from investors than startups so far. So,
Hmm.
we need to you need to harmonize these things, right? So,
Right.
not to beat it up too much, but like, imagine a dating app, right? You don't want to have all boys or all girls or all women or
Right.
all men. You need to have something for every type, gay, straight, whatever, but you need to have some parity, right? And we built a lot of feedback from major institutional investors, but we've been slower to reach out to founders, even though we're founders now. And so we're kind of in catching up by getting more founders now.
Yeah. Well, we have a network, so I'm going to talk to you after we end this, this interview. I have some people like to connect you with. I'm all about connections. So what's next for Systematic and you? What are the big goals for the next, say, 12 months or so?
Yep. So we're going to probably raise a little bit of outside money. We've mostly bootstrapped the company, me and my co-founder. We had some success in the previous exit and the rest. So that's one. And two, we're going to make a major push to make seamless, easy onboarding for founders. So we're going to go get a ton of founders. And then the last piece is we've fully integrated agentic AI into the platform. It gets released in about 2 weeks. And basically that lets you do everything you can do with a Perplexity or ChatGPT or Claude, but tuck the entire data history of venture, which we built, and our proprietary scores into the report. So we'll have pretty deep deep reporting on about 200,000 investors and about 350,000 startups. And then we're going to ask the startups investors to come on, complete the platform, and engage. And our hope is that we built the rudiments of an operating system for venture just to make every person in venture a little more efficient and more likely to reach each other and fund that more inclusive, even faster, even sort of more dynamic version of the future that we're all counting on venture founders and venture investors to build together.
Fantastic. So Max, if I could give you a magic wand and you can wave it over one challenge or one issue you're having right now that could keep you from reaching those goals, and you can go poof and take it away, what would it be and why?
Yeah, I think it would be that pretty quickly, VCs need to concentrate a little more on what they think are the holes being filled by venture firms and engage that way, less on who they know. And I'll tell you the reason why, just because problems don't get solved just by picking the right team. They get solved by picking the right team and helping that team get to revenue. I think the big shift in venture right now is a little bit of a de-emphasis on rapid growth, although that's still important, and a little bit more of an emphasis on resilience. Can you survive 18 months without raising the next round? Can you be cash flow positive before you're a 12, 14-year-old company, right? And the problem is if everyone just goes for broke, they take as much money as they can and try to take the whole market, you end up with a lot of disappointed, broken investments, which slowly erodes people's excitement about the space. I still think venture builds the future. I still think venture founders already have answers to problems just emerging, but you've got to be able to make sure that you're resilient enough to stay focused and solvent until the perfect match for capital comes along. We'd love to help with that, but I would, if I could wave a magic wand and it works, that's what I would do. I teach investors to look for people who are more resilient, even if their growth is a little bit slower. And I teach for companies, those founders, to look for the right capital, not just the big names they've heard of, because those guys, they're going to invest in 3% of startups. Like, you got to get out there and get your local folks and your angels and your incubators and your accelerators, and you have to go through the steps.
Incredible. So one last question for you, Max, and then we're going to ask you to share how people can connect and reach out to you. If we could bring you back in a year and revisit this conversation, I'd love to.
Hopefully I'm not homeless at that point.
Yeah. What does success look like for you in the next 12 months?
Yeah, so we're doing some big things in the firm, but success to me looks like 10 or 15 more large institutional investors and 5,000 startups using my platform as an always ready funding source to understand where they sit in the competitive stack, where they could be going, and what it means to get a check from who. Because I feel like a lot of guys don't get that right away. A lot of folks don't get that. And a great creative accelerator on your cap table is amazing. But a terrible investor with unrealistic expectations calling and screaming at you all the time is pretty horrible. And so it matters to pick the right person, not just get the check.
Yeah. Yeah. So good. Okay. Well, now's the time. How can people connect with you, Max, and find out more about Systematic?
Sure. So we'd always love to talk to everyone. We'd always love to get your feedback. What do you need from a platform like this? But anybody on your show can come in. They can find me at systematicventures.com. They can find us on Medium. So we're pretty easy to find, and we're here to help founders, and funders both. So come on, click there, and you'll get yourself a free 2 weeks on the platform, and we'll give you a discount as part of the sort of family here.
Nice. We'll get you that code or whatever you need. So you let us know what that looks like, and we'll add it into the show notes. So for you listening, make sure you go to the show notes to grab that. So you can get that special family discount through the Business Growth Spotlight podcast. So thank you for that, Max. That's awesome.
Thank you.
If you are listening to us or watching us on YouTube, Max and I, first of all, thank you for being here with us. Second of all, leave a comment below for Max. Make sure you go connect with him, go check out the platform. And also hit that subscribe button, because this is how we are able to ding you and let you know when more amazing guests like Max are coming on, taking time out of their day, sharing what's worked for them, what hasn't worked for them, sharing about their amazing product and services. Because again, the goal of this podcast is strictly to see more businesses flourish. We see too many failing within 5 years. I want to flip that stat. And Max has been so generous with his time to help me work towards that. So please definitely reach out to him, hit the subscribe button. Also, let someone know about Max and Systematic. That we'd be highly grateful for that. If you're listening to us on your favorite podcast platform like Apple, Spotify, Amazon, all the places, you can leave a review. We would love a 5-star review. That also helps us push this episode and the podcast out to more businesses, more people, more founders, to support them in their growth. And I promised y'all a gift. Actually, I didn't even say that at the beginning. Now that I'm thinking about it, I just rolled right into the interview. I was so excited. But y'all have a gift for being here. So if you are struggling with your visibility and throwing spaghetti at the wall, trying to get in front of your ideal client more, or your ideal prospect, and you feel like you're not achieving those goals that you're wanting, then go ahead and download our free Spotlight to Scale blueprint. You can go to spotlighttoscale.com/blueprint and go grab it and let us know what you think of it. Max, before I let you go and wrap up, is there anything that you'd like to share or say that I didn't ask you or we didn't touch on today?
Well, we're also based in New York City, and we love to go meet folks here too. So I forgot that, we do live in a real place. We're in the process of opening a little office in Los Angeles, and also a little bit of office in Berlin. So if you're international, trying to serve as broadly as we can. Just also, last thing we didn't say, but I do think, which is I think you're going to see more venture dynamism outside the US too. Just give you a crazy stat, 4.5% of the world lives in the United States. We do about 19% of the world's economic activity, but we're eating about 72% of the venture funding. And the sort of most dynamic, successful groups here are often immigrants to the US. So it's clear that there are great founders all over the world, many in the US for sure, but not just here. So we see this industry becoming international, and we'd like to be ahead of that. And we do try to keep track of foreign markets and all the rest. So if we can bump into each other by serendipity or otherwise in New York or LA, we're excited to do that.
Awesome. And whether you're a founder or a funder, go check out Systematic, go connect with Max, because his platform is incredible. So you definitely want to check it out. Max, thank you again for being here today.
Thank you.
I'm so grateful for your time and your wisdom. And thank you for listening to Max and I today. And we look forward to seeing you on the next episode of the Business Growth Spotlights.